Hey guys, welcome back to the channel. In this video, I'm going to show you how I use pre-market levels to enter and exit my trades. And I'm going to use my real trades from today so you can see these examples from somebody that is actually trading the strategy that I'm teaching. So there are, so many people out there, they'll show you something and you could learn a lot, but I like to use actual um you know examples of my trades and see that I don't just preach this, I actually use this. So I was trading the S&P 500. The way that I do that with the micro E mini, made $133.75 today. And the way that I did this is I'm looking at from the UK Open, which is right here, 3 o'clock, 4 o'clock. This area is when the London Open takes place. And a lot of times you'll see, a lot of price action. Now, the volume obviously at 9:30 is totally dwarfing the volume here. But if I zoom in just on this area, you'll see that a lot of volume takes place in this UK Open. So that's setting the stage for what I want to show you as far as the pre-market lows and the pre-market highs go. I like to take that pre-market starting at the UK. So the UK Open, and with futures, these trade. It's a Globex trading. So they trade all night long. So I have my pre-market low that we mark off. And then at 8:30 Eastern time, we see our pre-market high. So now going into the trading day, just zooming this in a little bit, and the indicator that I use only when I trade futures is VWAP. That's all. And VWAP is right around that 400 level on the SPY. So the way that I trade this is I have the SPY down here. So the way that I'm looking at it is that 400 level is coming right into the VWAP. And the 400 level is where we saw a lot of resistance and then support in the pre-market. So I have that right here at 4,004 is where that equates to the same area on the SPY. I always have the SPY down here. Sometimes I'll put the NASDAQ down here when I'm trading the S&P 500 futures, because a lot of times these are really mimicking and coming into levels that I might not have on what I'm currently trading. So that's why I like to look at both of these. But getting back to why I like to look and trade off pre-market lows and pre-market highs is because a lot of computer algorithms trade like this. And you can obviously see here from the trading day, right? So I'm going to zoom in. Our trading day starts at 9:30 a.m. and we push up and then come right back down to that pre-market low area. So right here, the algorithms want to test this right off the bat. And then we see a push up, comes back, retests that area, and then we get a really nice move. For whatever reason the algorithms, market makers like to do this. They like to test it and then retest these areas. A lot of times price likes to just gravitate towards these key levels. So we see here that was our pre-market low, and we saw some support. So we have really nice demand zone here. And you can see with this really extended move. I mean, that's a really, really big move for the S&P 500. And this is a 1-minute chart. So that is not that long. And you can really scalp these for decent, wins if you know what you're looking for. So then we come up here, just about approaching that pre-market high zone. Sell off again, right back to the same area. Okay, retests. So now what we're doing is we're trading in a range. This is called trading in a range. So the pre-market high, we now had right here at 8:30. And again, we just saw that, about a half an hour ago, just about. So these are areas, if you're going to trade, you can get short at these tops, right? You could get short at these tops, and you can get long at support. So if you get long at support, and for some reason, the market is looking really weak, and we see an extended sell-off, and we actually break these levels and make a lower low, well, then that's going to negate this range. And at that point, you're stair-stepping down. But right now, we're trading at a range, and totally expected this consolidation right at this level, 4,004, which is what we showed you over on the SPY is 400. Very key level. And this is also right on VWAP. So when it does this consolidation coming down, will we break down lower? Will we break this and then, come back down and retest this area? It's possible. It's possible we bounce. But that's why I like to watch these on, different things like the SPY down here. So if we're looking at the SPY, we're bouncing just off VWAP, just off that 400 level. This is a spot where you're going to want to wait. You don't want to take a trade here. You would rather take your trades here, 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 and here, because those are lower risk. Right here, when it's consolidating, you don't know if you're going to get chopped up, or if, we're going to break down, or if we're going to get a really nice bounce for, that afternoon push that we sometimes see. So trade, be patient, but trade those areas that you're in lower risk, higher reward. And that's how, and what, really led to my success today was just having these levels here and then taking the 133.75 and then not trading anymore. Already took 7 trades, went 6 for 1, had to cut 1 trade, and then it went in my way, my direction. That happens. So yeah, that's it. I hope that this video has helped you guys out. Look at those pre-market highs, pre-market lows, and just have those at least leveled out, lined out on your charts, so you know where those algorithms, other traders are also looking at those levels to either take profit into, or if you see real strength in the take profit into level gets broken, then on a retest, you would like to see that level hold up for a next move up. So hit the thumbs up for the video. I'll see you back on the next one. Take care, guys.